A very good morning to everyone. Myself, Gopika Santosh from RNG, welcome each one of you to our physical conference on UAE Corporate Tax. First of all, I would like to thank each one of you for taking out time from your busy schedule to attend this session and wish you all a great learning. Ladies and gentlemen, today's agenda is corporate tax session, which will be followed by Q&A, and then a session on UAE real estate outlook and ERP systems overview, both for 15 minutes each. And finally, we will wind up the day with a delicious lunch. So let's begin our first session on UAE corporate tax by our managing partner, CA Harikishan Rankawat. I'm sure that there will be a lot of questions from the audience, which will be addressed at the end of the conference. I would like to call upon Mr. Rangawat to speak on UAE corporate tax law.
Good morning, everyone. You can go. Many thanks for coming and taking out the time out of your busy schedule. Now, corporate tax, as you guys are aware, it was published on 9th of December 2022. And now you guys have got like 9% standard tax rate. Then again, 9, like you have to submit your corporate tax return by within 9 months of the end of your accounting year. So 9 is very crucial. Always remember 9. And there is one thing which you guys need to understand, that corporate tax law will be implemented from 1st of June 2023, but anti-avoidance abuse rule has already been kicked in. So now whatever changes you are making in your company structure or your financial year or the salary of your directors or shareholders, if there is any changes you guys are making, then you need to have proper rationale or the logical thinking while you are doing it, and you need to document it properly so that you can justify to the federal tax authority whenever they come for audit. So mind anti-avoidance, this general anti-avoidance rule, GAR, please keep in mind before you make any changes, and always discuss with us for sure. Yeah. And RNG Auditors, as you guys are aware, that myself and Chirag Gupta, we two are partners, and for the purpose of corporate tax, what we have done, we have tied up and we have already signed a joint venture with an Indian tax consulting firm, Taxo, based in Delhi. And that firm is actually owned by one of the ICI, the Institute of Chartered Accountants of India, Delhi, past president, C.R. Gupta. And he is having a team of around 100 tax professionals, and they are expert in not only in corporate tax as well as transfer pricing, which is also one of the critical elements of this corporate tax law. So there will be a lot of experts flying from there, because in this part of the world we don't have the expertise. We all are just reading the law and interpreting it and presenting it to you. But for real implementation, we will need their help. So we'll ask them to fly here and do whatever is required, because they have got solid experience in India. So we will take their help for sure. Today I will go through the background, introduction. Now I think, can you hear me now?
The mic is not working.
Okay. Now it is working, actually. Yes.
So I hope you guys would have heard what I told you earlier. Yes. So the agenda is like this. We'll go through the background, and we will look at the applicability. Then we'll go through the calculation of corporate tax and applicable rates. Then we'll go through the free zone person. And then we'll go through the deductions, where like which expenses are deductible and which expenses are non-deductible. Then we will look at the calculation of corporate tax liability. Corporate tax is a direct tax. It is being levied on your net income or your net profit. Whereas VAT is indirect tax, or it's a kind of consumption tax, in fact. And Federal Decree Law 47 of 2022 was issued, released on 9th of December 2022. And corporate tax will be effective now just after 4 months, because 1st of June 2023, it will be applicable for those companies who are having their financial year starting from 1st of July till 30th of June. So mostly I think Australian companies are having their financial year from July to June. Here most of the companies in UAE, they are having their accounting year either starting from like 1st of Jan till 30th of December or April to March, most of the companies. For them, it will be applicable from 1st of Jan 2024. Then tax period, it will be 12 months period. So yeah, I mean, you might have any accounting year, that's not a problem. Now, this slide is very, very important. Actually, we need to understand the basis of taxation. And in any country, the basis of taxation is the residential status. What is your residential status? So we need to understand this one very, actually in detail, I have put it everything here. So, yeah, so here you have resident. For resident, we all are resident. We are having the UAE residence visa. We have been staying in this country. If you are staying in this country for more than 183 days, it means you are a tax resident of UAE. And I will advise you to apply for tax residency certificate. Whether you are an individual or you are a company, you should always, for every single year, you should take TRC, tax residency certificate from Federal Tax Authority as one of the record. Because anybody in any country, even in India nowadays, they are asking a lot of taxpayers that you are an NRI, please prove it. So that is one of the proof for you. And particularly once corporate tax comes, then it is equally important for all the corporates as well. So for resident, worldwide income will be taxable, whether you are earning anything out here in UAE or you are earning from abroad. Everything will be taxable in UAE. Sorry. Non-resident. Non-resident is simple. Non-resident are those which are not resident. The definition is very specifically, that's what they mentioned. And for non-resident, for them, only UAE sourced income will be taxable in UAE. Now let's look at the further classification of resident. Legal person incorporated in UAE. So whoever is incorporated, whether a company in the mainland or a company in the free zone, that is a legal person. And further, legal person we have divided into mainland. If it is mainland, then you have to pay 9% standard tax rate exceeding 375,000 dirhams. So up to 375,000 dirhams, it is 0%, and more than 375,000 dirhams, it will be 9%. For free zone, it is 0%. I mean, I will discuss further in detail on the free zone definitely. Then foreign company. Now foreign company, if they are having any permanent establishment in the UAE, then it will be taxable. Whatever UAE sourced income they are generating, that will be taxable in UAE. So how do you define now permanent establishment, PE? Like in India, we have POEM, place of effective management. So if your directors or shareholders, or you have a permanent office or fixed place of establishment in the UAE, then you are meeting the requirement of permanent establishment, and that foreign company's income, whatever is being generated in UAE, will be taxable at the standard rate of 9%. Then natural person, this is very interesting actually, natural person. We all are natural person. So if we are doing any business, mind it, like you are holding maybe 5-6 properties, commercial properties, and you are renting it out. So you are generating a rental income. So it's a kind of business. So it might be covered here. Or you might be working as a freelancer in your individual capacity. Then it will be covered here. And I mean, the solution is either, even if you don't have a license, you have to register for corporate tax and pay the taxes and file the corporate tax return. But I would suggest, if you are doing any sort of business in the individual capacity, better you register your company and be ready in a proper structured way. Because in this country, I mean, as an individual, I mean, we are not supposed to, do, and then you don't have a proper bank account, then it will be very difficult to justify how much you are earning, because you are getting a lot of your personal transfers in your bank statement. So I would suggest better you register and do it. Then natural persons, natural person, one point you have to keep in mind that for natural persons income, if you are deriving from outside UAE, that will be taxable only if it relates to the activity, business activity carried out in the UAE. So this slide is very important. Now, non-resident person, as I mentioned you, whoever is not a resident is a non-resident, and they will be subject to UAE CT on, again, as I mentioned you, PE in the UAE. If they are having any permanent establishment, then it will be taxable. And so I mentioned here, if you look at it, PE, yes, then UAE sourced income will be taxable at the rate 9%. And if PE is no, there is no PE, then like you guys would be doing the business with Saudi Arabia, Oman, Kuwait, they are charging actually 10%, 15%, 18% withholding tax on your whatever income you generate in the UAE. They are deducting that. So that withholding tax, like in UAE, luckily as of now, they have kept only 0%. So if any non-resident person, if we are transferring the funds to them for consultancy or anything, as of now, the withholding tax is 0%, so you don't have to deduct anything. But at a later date, 0 means, I mean, they can increase at a later date. Like in VAT, we have 0% VAT rate for the export of goods and services. So here, withholding taxes 0% as of now. But whatever withholding taxes you are paying either in Saudi or in any other country, I mean worldwide, that credit you can always get it now from your corporate tax liability. Nexus in the UAE, this nexus in the UAE, if any non-resident person is having a nexus with resident or here with any company in the UAE, then that nexus will be taxable at 9%. Unfortunately, nexus, they haven't still defined in the corporate tax law, but in the cabinet decision, you might expect further clarification on this one. Now, we need to understand what is like we are always talking UAE sourced income. So what is the UAE sourced income? Let's have a look at it. If the income is earned from UAE resident person, if the income is earned from UAE permanent establishment of a foreign company, then it will be considered as UAE sourced income. And the third one is very important. If the income is derived from any activities or contracts performed in the UAE, or if you have a real estate asset in the UAE, or if you have if you are like having any rights which are being used for the economic purposes in the UAE. So in all these three cases, UAE, it will be considered as UAE sourced income, and it will be taxable in the UAE, irrespective of your status as residential status, whether it is resident or non-resident. Now, exempt persons, there are a few exempt persons. Generally, you know that government entity, government controlled entity, or a person engaged in extractive business or non-extractive business, for all of them, already actually there is a tax, and that is being charged by the ministry. That is already there for a couple of years. So that is, they are out of the scope, or rather they are exempt persons. But yes, if they are doing any other business other than their core activities mentioned here, then they will be subject to corporate tax, and they have to submit their separate financial statements. Now here you see there are few public pension or social security fund, or private pension or social security fund, then qualifying investment fund, and a juridical person in the UAE, which is owned wholly and controlled by exempt person. Then in that case, they have to submit an application to authority for exemption. They are not like outside the scope of UAE VAT, straight. They have to apply actually, and they have to submit an application. Then FTA will allow them, okay, you are also exempt. Qualifying public benefit entity, these are the like charitable institutions, and there will be a cabinet decision coming up in the future. They will clarify that, okay, maybe Red Crescent or Emirates, some Emirates Crescent, they are the like charitable organization, and whatever these public actually benefit entities will also be considered as exempt persons. Now, exempt income. Dividends are exempt, or in the UAE corporate tax law, from whatever you are receiving from a resident juridical person, then dividends and other profit distribution received from a participating interest in a foreign juridical, if you are receiving from foreign as well any dividend, that is also exempt. Then income of a foreign permanent establishment. Now, if, like I mentioned earlier, that foreign juridical person, if he is having any sort of income from abroad, or if they have opted, actually depends. If they are going to opt that their foreign tax rate is at least 9%, and then if they are paying already in the foreign, then they don't have to pay the taxes here. They will be considered as exempt income. If you are not paying there, or if there is no tax in that jurisdiction where you are, then you have to pay the taxes here. Now, income derived by a non-resident person from operating aircraft or ships in international transportation, that will also be exempt, because they want to encourage all the logistic and international carrier business. Any other income, if you are generating any sort of capital gain from a participating interest, then that will also be exempt. Now, participating interest, if any foreign, if you are like a UAE shareholder company and you are owning 5% or more in any of the foreign juridical person, then, and you have an intention to hold those interest or shares or stock or whatever investment for the next 12 months, then it will be exempt. If you don't have like more than 5% shares, then it will be taxable. So always you have to keep in mind this one. And it will be taxable at the rate of 9%. Now, calculation of corporate tax, it is very simple here. I mean, there are like two classifications we have put it. General, mainland, non-qualifying free zones or permanent establishment. We will further elaborate it later on. But yes, up to 375,000, 0%, and 9% for taxable income if it is exceeding 375,000 dirhams. Then qualifying free zone persons. You know that there are more than 40 free zones in the UAE, and all the wherever you are, that is all considered as free zone persons, but qualifying. So you have to keep in mind, actually what is happening if you are dealing with the mainland, then, I mean, there are few criterias as well, which I will discuss in the later slides. Then only you will be qualifying free zone persons. And if you are qualifying free zone company or person, then it will be 0% on the qualifying income and 9% on non-qualifying income. So this non-qualifying income, still they have in the UAE corporate tax law, it has not been defined properly. So we are waiting for the cabinet decision. But yes, non-qualifying income will be the income which you are generating from the mainland, most likely. Now, UAE corporate tax will be implemented from 1st of June 2023, as I mentioned you, and you have to file your corporate tax return within 9 months from the end of your accounting year. Yes, few examples I have put it here. If you are having accounting year from July to June, then your corporate tax effective first time it will be from 1st of July 2023. Jan to December, then corporate tax will be applicable from 1st of Jan 2024, and April to March, then corporate tax will be applicable from 1st April 2024. And after the end of your accounting year, then within 9 months, you have to submit your corporate tax return. Now, free zones, as I mentioned you earlier, that there are few criteria actually you need to follow One of them is you have to maintain adequate substance in the UAE. Means you need to have a flexi desk or some sort of physical office in order to prove your economic substance. You need to have few employees as well. You cannot generate revenue without having employees. In the past, I mean, in UAE, there are many companies who are generating millions of revenue, but there is no employee, there is no office, there is no operating expenditures incurred in the country. So you need to have a proper, adequate substance in the UAE. Yes, then there is a transfer pricing rule, which Chirag will discuss later on. You need to comply with the transfer pricing rules and you need to actually document it properly. And then you have to derive only the qualifying income, which I explained to you, that you have to either generate your income either from the free zones or between the free zones or from outside the UAE. If you are dealing with the mainland, then yes, proportionately, whatever income you have generated from the mainland, it will be taxable at the rate of 9%, and the rest of the income, qualifying income, will be taxable at the rate of 0%. One more thing, you have to or you must get your audit financials audited every year in order to avail this 0% in the free zone. And up to you. I mean, there are few multinational companies in the free zone. Even if they don't pay the taxes here, they have to pay the taxes in their home jurisdiction. So if they want, they can always elect to charge the corporate tax at the rate of 9% instead of 0. And it will see corporate tax will be applicable to companies and branches that are registered in a free zone, and they will be considered as free zone persons. And I mentioned already that here all free zones will be required to register and file a corporate tax return, whether they are qualifying free zone persons or not. Forget about this one. There are more than 665,000 companies in the UAE, and all of them have to file. First, they have to register for corporate tax, then they have to file the corporate tax return within 9 months after the end of their accounting year. This was actually clarified in one of the conference organized by Ministry of Finance. They mentioned that forget about 375,000, everyone has to register and they have to submit the corporate tax return within 9 months. And unlike VAT, there is no deregister button on their website for corporate tax. You cannot deregister, you have to register and you have to submit every year, irrespective whatever income you are generating. Now deductible expenditures. Deductible expenditures, I mean, you have to keep in mind that whatever expenditure you are generating or spending for deriving the taxable income, not for your personal, it shouldn't be incurred for your personal expenditure or it shouldn't be for any capital asset. So all your expenditures should be revenue in nature and it has to be wholly and exclusively incurred for the purpose of business, then only it will be deductible. Like as I mentioned, your expenditure incurred wholly and exclusively for the business, then expenditure incurred for business purpose only. And this one further you can elaborate it further, we can look at it like if you have incurred suppose any expenditure for your business as well as personal purpose, then what you have to do, you have to identify very clearly. If it is identifiable, then that portion will be allowed. Whatever is identifiable and incurred for the business, that will be allowed, and whatever proportion, now what you can identify from your personal expenditure that okay, this much is pertaining to the business, then that will be allowed, and the rest will be whichever is like unidentifiable and not pertaining to business, that will be disallowed. Non-deductible expenditures, anyway we have discussed while discussing deductible. So if it is not for business or if it is for generating the exempt income, and if it is for generating the exempt income, then it will not be allowed, and losses not related to business, you are having some other personal loss or something else, and any other expenditure, I mean, which will be notified in the coming time in the cabinet decision. Non-deductible expenditures, I have put few examples. You can have a look at it. accrued salaries and wages. You know that salaries are being paid next month every time. So we are accruing it or in the financials. So all those accrued salaries and wages, actually that will be allowed as deduction. This is another illustration I put it. If you are repairing few assets and those assets, you know that it is being used for the business, then whether this repairing expenditure is allowable deduction, yes, it will be allowed. But keep one thing in mind that that expenditure, whatever asset repairing you are doing for any sort of asset, that is not enhancing the useful life of the asset, then it will be capitalized. It will not be actually a deductible expenditure in your revenue statement. This is the illustration number 3. If you have already sold the goods and then that receivable or that debtor is not realizable, then in that case you can always ask for deduction because you couldn't generate the profit, or realize the cash. Interest expenditure, you have to keep in mind that there are two types of interest. Actually, though, two articles they have put it: general interest and article number 31, specific interest. So here they have put it very clearly: when general interest deduction, net interest expenditure, it is kept up to 30% of EBITDA, earning before interest, tax, depreciation, and amortization. So it will be allowed up to 30% only, and more than that, it will be completely disallowed. Net interest expenditure means your interest paid minus interest received. If you are generating any sort of interest on your fixed deposits or any sort of investment, that will be deducted. So I am referring that net interest expenditure. Here in this line, I put it very clearly, NIE, which is net interest expenditure. And so if you have not, if you are not able to deduct all your net interest expenditure in the current year, then you can carry forward it for the next 10 years and you can always claim it. Already I mentioned here. And these provisions are not applicable on bank, insurance provider, and natural persons. Now, specific interest, I don't want to go in much detail, but just keep one thing in mind that if you are taking any loan from your related party, whether from your related party, connected persons, related party may be, up to 4th degree of kinship, like your son, daughter, grandfather, grandson, and then your brothers, sisters, everything they have already covered in the related party. So keep in mind when you are dealing with your any related party and you are taking any loan, then that interest will not be deductible at all. So always try to take the loan from the third party or particularly from the bank. In this country, you cannot take the loan from from your friend, or that is not allowed actually. Banks are nowadays very strict. So let's be careful. Entertainment expenditure, you can always entertain, but there is a cap. Up to maximum 50% of your entertainment expenditure is deductible, rest is not deductible. So here you can see entertainment expenditure. I mentioned amusement expenditure, recreation expenditure, which is incurred during the tax period. So you can take the 50% as deduction. Then this clause will apply if you are incurring the entertainment expenditure either for your customers or suppliers or shareholders and other business partners. They haven't mentioned employees. So employees will, I think, what you can do, if they are paying any sort of entertainment expenditure as part of the compensation or the salary, then it will be deductible anyway 100% as part of the salary. But if you are giving any employee, like if he is working late and if you are giving him food, lunch or dinner, anything, then you can claim up to 50%, not 100%. And expenditure, they have given few examples that expenditure should be incurred for meals, accommodation, transportation, etc. Non-deductible expenditures. Now there are like few non-deductible expenditures which are like external giveaways. Here you are giving to your external parties or to external organizations, like either as donation, grant, gifts made to an entity that is not a qualifying public benefit entity. If you are paying to a public benefit entity qualified, which is, they will mention in the cabinet decision, then it will be allowed. But if you are paying to another which is not a qualifying public benefit entity, then it will be disallowed. Fines and penalties, bribes, or other illicit payments will be disallowed straight away. But yes, in your income state, actually you are booking that transaction as in the books anyway. You can always book it, but it will not be deductible. So these are the external giveaways. Now I have put few examples here, like Emirates. Somebody has given 22,000 to Emirates charity portal as donation. So this will be allowed as a deduction. Yes. Answer is yes. And public benefit entities, there is a definition as well that these are the reporting entities whose primary object actually is to provide goods or service for the social benefit or for the public benefit, and their main intention is not to generate return on the capital. They are rather helping the society, or their primary objective is always kind of like helping, or it is for the social benefit. Then it will be eligible to claim deduction. Illustration, yeah, if you are paying as a penalty 50,000 dirham penalty for late filing of returns, then it will not be allowed as deduction. It is already mentioned, fines and penalties. Non-deductible expenditure, yes. Earlier I discussed externally. Now internal giveaways. As a shareholder or owner, you are withdrawing dividend or any other drawings for your personal use, that will not be deductible. So these are the internal giveaways, I would say. There are few examples, like you have declared a dividend, like company has declared a dividend of 10% out of their net profit, then dividend is not an expenditure, as I mentioned you, and it will not be allowed as a deduction. Now, unincorporated partnership, this is one of the new concept which they have put it. If you and me as an individual, we start a partnership for some sort of business, and that is unincorporated partnership firm, then as an individual, now as a partner, I am withdrawing from the partnership firm, which is unincorporated. That will not be allowed as a deduction. And this in unincorporated partnership firm, what is happening, you can always actually choose either you want to submit your corporate tax return as unincorporated partnership, or you can ask the FTA to submit the corporate tax return on individual basis to FTA. So once they approve, you can opt for any of the procedure, and you can be taxed in your individual capacity, whatever you are generating from that unincorporated partnership. Now, I think we should do some sort of yoga. Keep your right hand up, take your mobile in your right hand, and then from left hand you can put it on silent mode. Okay, these are the government takeaways like corporate tax or VAT input or tax on income, whatever imposed outside the state, or any other expenditure as specified by the minister. These all are government takeaways, and these are the taxes on your net profit, which will not be deductible. There are few examples which I put it here, like you paid 150,000 as value-added tax, so that will not be allowed as a deduction. I can share this presentation with all of you, so you can go in detail those illustrations which will be helpful for you. Now, there is another example whereby corporate tax, you paid the corporate tax 9%, that will not be allowed as a deduction in your tax return. Okay, now we have discussed actually non-deductible expenses, external giveaways, which I discussed, donation, fines, and bribes and all things. Then internal giveaways, dividends, and withdrawals. And these are the government takeaways: corporate tax, recoverable input VAT, and etc. So this is the summary what I have discussed. Now, this is the calculation mechanism for corporate tax liability. So you can look at it, first of all, accounting net profit or loss. As stated in the financial statement, you can take from your income statement. And generally in this part of the world, we are following international financial reporting standard. But in the law, they mention that whatever appropriate accounting standards you have to use. And in the mainland, actually in the law, it is not mentioned that you have to get your financials audited every year. But for the free zone, they have mentioned very clearly it must be audited in order to avail 0%. But for the mainland entity, they haven't made it mandatory. Although if you look at your memorandum of association, it is mandatory to do the auditing on yearly basis and submit the audited financial statement to Dubai Economic Development Department, or you have to actually submit, but we are not doing it, and the practice is not being like strictly implemented. But yes, as a good practice, you must get your financial audited, even though it is not there in the law, but in order to protect your interest, better start, get audited and keep it ready, everything. Oh, sorry. And then non-deductible expenses we discussed, you have to always add it back. And exempt income, dividend, capital gains, that you have to reduce. Then less reliefs, Chirag will discuss further intergroup transfer, small business relief in detail. You can reduce those relief, then you will arrive at gross taxable income, GTI. And whatever carry forward losses, actually you can, if you are having any losses, not from the retrospective, because corporate tax will be implemented from now, this year, or 1st of Jan 2024. Going forward, any loss you can always carry forward and claim it, deduct it whenever you are generating any sort of taxable profit in future. And they have given it for, like, I think indefinite period, which Chirag will discuss in detail. And then you arrive at taxable income. Then corporate tax liability, you can calculate up to 375,000 zero and then 9%. And it is flat rate. 9% tax rate, if you look at, I mean, in the whole world, there is Hungary, there is another country, European country, where they have 9%, and this is the second country who have opted for this 9%, which is very minimal, and it's a good move by the UAE as such, because that way, as of now, like, we are in the grey list of Financial Action Task Force. So by doing these implementation of corporate tax, and you have seen that VAT has been implemented, ESR was implemented, now AML, anti-money laundering, is implemented. Now they are coming up with the corporate tax. So that way, actually, we will have more clarity and going forward more compliance. And as a result of that, maybe we will be removed from the grey list. We will become the white list most likely, maybe in another 2-3 years, let's hope for the best. And then you will really see the growth of UAE as a country, because once you are having, like, you are out of the grey list, then there will be like big investment coming up in the country, and you will see another Dubai or another UAE going forward, I'm sure. And one thing which I mentioned you here, you can always reduce your foreign tax credit, whatever withholding taxes you have paid in various countries or any other taxes, you can always get that credit. And then your net corporate tax payable, you will arrive at the net corporate tax. I think I have done from my side. Now, Gopika, I can take it over. Thank you very much. And
a big round of applause for our first speaker, CA Harikishan Rangawat. Please. So now for the next topic on corporate tax, we have with us our partner, CA Chirag Gupta. I would like to call upon Mr. Gupta to speak on UAE corporate tax law. Sir, please.
Hello. Hello. Thank you, Mr. Hari, for the insightful session. Before I begin my presentation, let me share something. As we all know, nothing in life is certain except death and taxes. Can we extend death? Very difficult. Maybe we can reduce the pain with the help of doctors. Can we extend tax? Government has already extended tax because the implementation date is 1st June 2023, but for most of, I think, people sitting here, it will be from 1st Jan 2024. Now, can we reduce the pain? Yes, we can help you by, in the terms of proper planning. If you do proper compliance with the law, we can help reduce the tax liability. With this, I start my presentation. First one is related parties and connected person. Now, this related parties and connected person will have huge implications for UAE business. Let me start with by giving what is the definition of related party and connected person. So the law has given a very broad definition for both the terms. Related party means owner who is having more than 50% shareholding or their relative up to 4th degree. 4th degree means in layman terms up to great grandfather or great grandmother. It can be also adopted or legal heir. Everything will cover over here. Connected person means director, manager who is having control or managerial position in the company. They will fall under this category. Now, why this concept has been introduced? Because there's a possibility of tax arbitrage. When the law was introduced, ladies and gentlemen, many people told that let's increase the salary of the owners, we will reduce the profit, and thank you very much. But no. The government has said that in this kind of scenario, we have to apply an approach called arm's length principle. Now, what is arm's length principle? Arm's length principle means any transaction between two unrelated parties in an uncontrolled environment. It means market value. Now, again, how to arrive at arm's length? UAE, again, as we all know, is always following the international best practice. So the international best practice to arrive at arm's length principle is called transfer pricing. So we have to use a concept called transfer pricing in order to arrive at any payments that you make to a related party or to a connected person. But if the company is not following such principle, then the authorities have right to add back or do the adjustment in your corporate tax return, which may again lead to fines or penalties. Before moving further to transfer pricing, let me share some example. Suppose an owner of the company hires a beautiful secretary and pays an X amount of salary. Will this cover over here, connected person, related party? Yes or no? Yeah, no. But before the end of financial year, they both get married. Will this now cover over here? Yes? Now, the year has ended, but we all know the return filing, we have 9 months. Before the return filed, they got divorced. Will this still be covered over here? Okay, moving on to transfer pricing. Now, how to arrive at transfer pricing? The government has given 5 methods. I will not be going to each of the method because this method itself will take another 2 to 3 hours and we cannot consume in a few minutes. Maybe we can have a separate session on how to do transfer pricing. But the government, again, over is very generous. They have given the flexibility to the business owners itself to choose the appropriate method or combination of method that they want to apply, like cost plus method, resale price method, CUP method. But we have to consider one thing in mind that this method, each method has their own, you can say, implications. So depending upon the business nature, depending upon, like, say, qualification of the owner or what experience he is having, all those factors will come into place in determining the transfer pricing. Moreover, in the transfer pricing, we have to keep 2 sets of documents, which is local file and master file. Local file will have documents like a company profile, the organization structure, and master file will have company profile, organization structure, and the local file will have transactions that you enter. Plus, when you submit your corporate tax return, the authorities will also give you a form that you have to submit with along, that is called transfer pricing. So as I mentioned, this will have huge implications for all the businesses, but we have one more relaxation for small and medium businesses. There might be some relief, but what kind of relief on what is covered, unfortunately, is not yet clarified yet. We have to wait for the executive regulation, and we may expect some relief for small business enterprises. Again, the idea of the UAE government is to keep the tax compliance cost on the businesses as low as possible, because as we all know that slowly we are moving to a tax regime, and a government is going very slow approach so that we all can come together and submit correct return. Okay? Moving on to tax loss. I always pray to God that everyone should have a profitable situation, but in case we have a loss, then what is the treatment? Again, UAE government over here has given indefinite timeline. We can claim the tax loss in future tax period. If we compare this to other jurisdictions in the world, I think very less countries have this approach. Most likely, all the countries, they have certain limited areas only, we can take that benefit. Now, secondly, if the losses has been carried forward, we can claim up to 75% of taxable income of that year. Like say, year 1, I have loss of 200, but in year 2, I have profit of 100. So I can only claim 75% of 100, which is 75 in this year, and remaining 200 minus 75, 125 will be carried forward to next year, in which I can claim. Okay? Moving on, Hari, I think already mentioned this thing that any tax loss incurred prior to the tax implementation date, we cannot claim the credit. Like say, the year end is Jan to December, so any losses in your balance sheet as on 31st December 23, that cannot be carried forward, which is again a sensible approach because the tax was not implemented. The government has also not asked profit on that, so same thing with loss as well. They don't expect you to adjust your loss when the tax has been introduced. Now, what happened in case of change in shareholding in your company, which is more than 50%? In case a loss situation, suppose you have, but next year the shareholders change more than 50% then, but still the primary activity of the company is same. You can still continue to carry forward the tax loss. Now this primary activity of the business is very subjective term and it is open to interpretation, and we have to look very closely whether this will fall under this or not. Let's take one example in case of tax loss. For example, company A, it had loss of 250 in 2023. So as we all know, considering December year and 2023 loss, we cannot carry forward to future period. 2024, it had loss of 100, which we will carry forward to next year. 2025, now the company had profit of 200. Okay, so what we will do in 2025 is, the income is 25, so maximum we can adjust is 75%, which is 150. Okay, now the loss is 250, so I can only adjust 150 and the balance I cannot carry forward. Okay, coming to 2026, since there is no carry forward, I will pay entire tax on 300. Coming to example second, which is company B, 23, same situation, there was a loss, so I cannot carry forward. 2024, I have loss of 175, which I will carry forward to 2025. In 2025, we had profit of 200, so I can adjust maximum up to 75%, which is 150. I can set off and I will carry forward the remaining loss, which is 25. 2026, again the company had loss, so carry forward loss plus the current year loss, I can carry forward to 2027. I hope with this example, the loss situation is clear to all of us. Let's take one more example for the shareholder change, where we mentioned that if more than 50% shareholding is changed. So let's discuss over here. Suppose in year 1, company Z had two shareholders, X and Y, holding 30% and 70%. In year 3, what happened is one more shareholder called A is been introduced, and the shareholding is now changed. If you see both again X and Y, the shareholding has been reduced, but they still hold more than 50%. So in this case, they can carry forward that loss because the shareholders are still holding more than 50%, even though the percentage has been changed. Moving on to another thing called tax group. Now in VAT, we already have VAT group, and when this law came, many people were confused whether same VAT group we can use in tax group or not. No, we cannot use. Now we have to consider VAT separate and corporate tax separate. So over here, the conditions to create or to form a tax group is also different. So let's focus on corporate tax. What are the conditions to create a tax group? There are simple 3 conditions to create a tax group under corporate tax. First condition, there should be 2 juridical person. Juridical person means there should be 2 resident companies holding minimum 95% of share capital or voting rights of each other. Now, when we generally go to a client, suppose he says that I have 10 companies and this is my own group. But when we see the documents, the owner himself is the owner in these 10 companies. So can we create that tax group over here? No, because no company is holding those companies. So in this case, we can do a tax planning. If he wants to create tax group, there should be one holding company holding these 10 companies. Then only we can create a tax group, because first condition says that there should be a juridical person. Okay? Moving on, those 2 companies should neither be an exempt company, nor they should take advantage of qualifying free zone person, and those companies should follow same financial year and use same accounting standards. If like one company is following Jan to December and another company is following April to March, in this case, we cannot form a tax group. Either they should change the financial year and then they are eligible to form a tax group. Coming back to the advantages of tax group, as we all know, ladies and gentlemen, the basic thing is, when you form a tax group, it considers as a one single person. So instead of filing, like say, 10 different returns, you will only file one taxable return, so which will save your team's time. Instead of doing 10 compliances, 10 returns, 10 different corporate tax payment, he will make only one. So you will consolidate everything, put in one, and submit. Now, the entry and exit to tax group has also, they have simplified it. For example, there's already a tax group running, and you form one more company, a new startup. Now, being a startup, it has loss. So it can join that existing tax group, and that losses of that startup, if you can adjust it from the tax group profit. So the government has made the entry and exit barriers to an existing tax group also very simple, straightforward. Again, the idea is to lessen the burden of the corporate tax cost on the SMEs. Moving on, transfer of tax loss. Now let's say in the earlier example when we discussed that the gentleman was having 10 different companies and he was the 100% owner everywhere. So we were not able to create a tax group. So we have one more good news over here. One more relief has been provided by the UAE government. What it says that, let's first understand the basic conditions. First condition is there should be 2 companies against juridical person holding 75% at least shareholding, or there is one good part over here that if suppose a third person is holding minimum 75% of shareholding in company A, company B, in this case I can transfer the loss of B to A or A to B or vice versa. So in earlier example when we were not able to form a tax group, but since he is holding all 100% shareholding, we can transfer the loss from company B to company C or vice versa, whatever. Make sure that don't get confused with this with the tax group, because in tax group you are filing one VAT, one corporate tax return. Over here you will file different tax return for all the different companies. They have just allowed that you can adjust the tax loss from company A to company B, provided the shareholding is common. Okay, same condition over here that was in earlier cases, that is not available to exempt person to qualifying free zone, and they should follow same financial year and use the same accounting standards. Okay, so again government has given a relief to small businesses where they're not able to form a tax group because of this structure, which is very common in this part of the world, where we have seen that shareholder himself is the owner and the holding concept is not that much prevalent, especially in SMEs and large business houses, so they can get good benefit out of this provision. Moving on to withholding tax and foreign tax credit. Withholding tax, again, there was a lot of confusion in the market when the law came. I mean, what is this concept? Let's first understand the concept of withholding tax. For example, a US company is providing a services to a UAE-based company, and when the UAE company will make a payment to that US company, it will deduct a tax which is called withholding tax. So, whenever a UAE company is making a payment to non-resident person, it will deduct withholding tax and pay this to government. But for now, we don't have to worry because in the law, the rate is 0. It may be extended in future, but right now it is 0, so no need to worry as of the moment. But because of 0%, one good thing is there that suppose a UAE-based company is providing some services, let's say to Saudi Arabia. In Saudi Arabia, suppose you have paid withholding tax of 15%. So you can claim that credit maximum up to the corporate tax rate, which is 9%. So if you have paid 15% in Saudi Arabia, you can claim the credit of 9% when you file the corporate tax return. Like say, similar case, suppose in Bahrain, again, you paid withholding tax of 5%, so you can only claim a maximum up to 5% while submitting your corporate tax return. Now, foreign tax credit. As the word suggests, ladies and gentlemen, if suppose your company is also paid some foreign taxes outside UAE, you can claim the credit of that tax paid outside UAE when you're filing the corporate tax return. Obviously, same principle, you can claim up to maximum 9%, and remaining you cannot claim refund or carry forward, it will lapse. Which is again, you can say a welcome move where government is not allowed double taxation. Same income, if you pay a tax outside UAE, you can claim the benefit, obviously with certain conditions. Moving on to other key considerations of the corporate tax law. Now I want this session a little bit interactive. Registration first. So is registration compulsory for all the companies, even for free zone? Any threshold is there? Like in VAT, we say no, wait, reach turnover, then only we'll register. Any threshold? No threshold. All the companies has to compulsory register, whether free zone, whether mainland, no exception. Now, for a company, suppose company, who is responsible for company to register? Company itself has to register. For sole establishment. Sole establishment, under sole establishment, the individual owner is liable to register under corporate tax law. But it can always request to FTA, to the Federal Tax Authority, that register my company instead of myself. Like, for example, in partnership firm, which is unincorporated, it has 10 partners. So in this case, again, all the 10 individual partners has to register, which will create a lot of problems for the partners. So they can request to FTA that instead of we registering 10 different partners, to register me as a single entity, which again depends on the FT whether they approve or not. Now in case of civil company, who is responsible? Individual owner or the company itself? Any idea? Anybody has civil company over here in the trade license? No? So for civil company, the individual owner has to register, not the company. Okay? Moving on, individual. Whether we as the individual has to also register under corporate tax law? We have to register if we provide any business, then only. We cannot say, no, I am not having a UAE passport, I am having a, suppose, X country passport, where should I pay tax? You have to pay tax if you earned any state source income, you have to register yourself and pay taxes to the government. Free zone person. Now, many times we see that client, they have a company in free zone operating with a flexi desk office, and in mainland, they have their own office and everybody is working from mainland. Now, in this case, that free zone company, since it is managed and operated from mainland, it might be considered as a mainland, it would not be eligible for the qualifying free zone benefit. Number one. Number two, like suppose in free zone, there can be two types of income. One is qualified income, and second, non-qualified income. Qualified income, how much tax we have to pay? 0%. And non-qualified income? 9%. Now, question arises whether that 375,000 limit would be applicable over here or no. As per if you read the law, that provision will not be applicable. So, again, it depends upon you how you want to structure your company, whether you want to claim that benefit or not. Moving on to record keeping. For how many years we have to keep a record? 7 years. Whether audit is mandatory? For free zones, if you want to claim the benefit, it is mandatory. For mainland, as of the moment, it's not mandatory. It might be mandatory in future, but again, it is advisable to have audited set of figures, because if you have seen the corporate tax return, what the previous speaker mentioned, the starting is profit. So it's always good if you have audited books, so at least you know what is the correct profit of your company. Moving on to POEM. This is very interesting concept, which I think everybody knows nowadays, place of effective management. Suppose I have a company in BVI, but I'm managing from here. Since I'm managing from here, the place of effective management is here, and I may be liable to pay tax on that BVI company to UAE. Similar case of free zone also, which we already discussed. Moving on, VAT deduction. Whatever VAT I am paying to the FTA, can I claim as deduction? Yes or no? No, I cannot claim as deduction. Also, nowadays, because of this transfer pricing and related party, it is always advisable to also have a family tree, especially in a large business houses, where the entire family is in the business. It might be the customer, the supplier, they're related, but they themselves don't know whether they're related or not. So nowadays, within company profile, we should also have a family tree structure. So at least the accounts, finance, tax department, they know whether you are dealing with any related party or not. Now moving on to another concept called GAR, General Anti-Abuse Rule. Let me start with an example. Suppose Mr. A has a company, and in that company is a profit of 700,000. So Mr. A, what he does is, he goes to another consultant and he forms one more company. In that company, he splits the profit 350 company A and 350 company B. So he says, now my tax liability is 0, because 375,000 dirham I can claim the benefit and I will pay 0 tax. So government already said no. This you have misused the provisions of the law, so such kind of is not allowed, and they will add back the profit plus charge the tax. So there is always a thin line of difference between tax planning and tax evasion. So what he did was a tax evasion, because he misused the provisions of the law to claim the benefit. So the government has clearly mentioned that if you use such kind of practice, which is not making commercial sense, but suppose now we are in Dubai, we want to open one more company in Sharjah, corporate tax is coming, we open one more company, that is justifiable again. You have to justify that we have new customers, you want a new business, then it's okay. But just to claim the benefit of corporate tax, illegal terms, that is not allowed, and the authority has right to add back the profit and to charge penalty. Moving on, now what is the way forward? How we have to prepare for the corporate tax? The government over here is anyways very proactive. They have given sufficient time. They have released the law in public domain, so we know, everybody knows. So now we cannot say that we were not aware, because ignorance is not an excuse. So first thing, obviously, we have to do an initial review. See all your agreements, all your contracts, loan agreement, documentation, ERPs, you have to streamline them. Then, once the cabinet decision is released, do an impact assessment, whether how more you will be impacted. Moving on, before the financial year, you have to go live, you have to implement. So like, for example, entertainment expenses, which is only available 50%. So these all basic details you have to tell to your team member who is doing, or basic doing the record keeping. So at least at that time itself, you can structure the accounting so well that when you're filing the corporate tax return, you don't have to go back and do all that manual adjustment. And last but not the least, ongoing monitoring, because there would be keep on coming some circulars, some guidelines from the FTA, from the ministry. So we should be aware what's happening, what updates are coming, so that we're compliant with the law. With this, I end my session, but the main crux over here is we have to do plan now, because government has given sufficient time, number one. Number two, the the UAE as a whole is moving from no tax to low tax jurisdiction, and the UAE authorities themselves know that it's not easy for businesses as a whole. It's a challenging time for all of us, but with the help of the government, with the help of consultants, you can plan in such a way that when corporate tax becomes live, we all are prepared and ready to pay tax. Over to you, Gopika. Thank you.
Thank you, Mr. Chirag Gupta, for addressing us and explaining various articles in detail. We need to wait and watch for the further cabinet decisions to be issued in few days. A big round of applause for Mr. Gupta. Now I request, sir, to be on the stage for the Q&A session. Please ask as many as questions to our speakers. It's free of charge and the deal is valid for 20 minutes. Please.
Yes, I think Chirag has given a great brief, and there were, I think, few overlapping, but I think it was good for you. Whenever he asked the questions, you were ready. So it means throughout the actually session, you guys were very active. Thank you very much for that. And whatever question you have, please let me know. I mean, if you have any question. Amit. Can you give it to Amit?
Chirag, Haribhai, we want to understand there is a salary which management takes, right? As directors, as people who are working into the business. How much of that is exempted? What are the perks to the management which are exempted? And where will be the cap? And if a person has two businesses, like in our case, we have two companies, will the income be added? But there are a couple of partners which are different in the other company. So how does that work?
So again, we have to look to the transaction. The government as
the first part is the management fee.
So as of the moment, there is no such maximum limit, minimum limit, some threshold the government has prescribed. It has to be what the government says at arm's length principle. We have to do a detailed transfer pricing analysis and see, depending upon the owner's experience in the similar industry, his qualification, how much time he is giving, we have to arrive at the correct remuneration as per the market, which will be only allowed for all these companies for the first question.
For these salaries, actually, you need to have proper transfer pricing documentation, which will be running into 300, 400 pages. And so you have to go to the consultant and always prepare transfer pricing documentation.
For salary?
Yeah, for salary or whatever perks or benefits you are giving it to your directors or shareholders or related party or connected person. So we need to have proper documentation. And there is a database actually, which we have to buy for the Middle East region. And that database itself is like costing $75,000. And from that database, we will collect the benchmarking comparative data for salary for a director with this kind of qualification, experience, and we need to document all those things. So I can tell you, I mean, it is better to go to consultant. I mean, you can't prepare yourself for sure. And that's the reason even we don't have the experience. We are going to get the expertise from India for that matter, particularly for the transfer pricing. And this is not only with regard to salary, this is with regard to any transaction if you are doing with your related party or connected persons or under the same common shareholding, whatever companies you have, we need to have the proper transfer pricing documentation.
For the second company, again, because since the owner is same, so again, same what Hari mentioned, transfer pricing, how much time he is devoting to both the companies. In the transfer pricing document, it will cover. So we have to create a transfer pricing, actually not for everyone, but there might be small business relief to SMEs, again, because the idea is same that the government doesn't want to burden the SMEs. So there will be some small business relief, might be, for which transfer pricing is not applicable. We have to wait for the regulation, executive regulation to come out. Sorry?
Yeah, we have to wait for the cabinet decision. Maybe, I mean, they will come up with some sort of benchmarking number for the salaries or for something. I mean, let's wait and watch. Once cabinet decision is out, I mean, there will be actually, like in executive, if you look at VAT, government has issued VAT executive regulation in detail, but in corporate tax, it is not going to come. I mean, there will be few cabinet decisions coming up. I mean, as mentioned, like a related party, transfer pricing on few other entertainment expenditures and all some data they might mention, but they are not coming up with a detailed executive regulation. But yes, time and again, they will be issuing cabinet decisions like in India and other countries, tax authorities are issuing notifications.
Hi, Hari and Chirag. Thanks again on the same topic what Amit had highlighted. The working partner salary, right? So some of the friends of mine, I've seen that they do make a labor contract, even for the partners. And then the salary goes through that route.
WPS.
So is it something which is permitted, or again it will fall into the related party or transfer pricing, etc.?
So again, it will fall under a related party because it's a connected person. So any payment you make, because in labor contract is very easy, you can go to labor department and mention whatever salary you want to declare. So again, you have to prepare transfer pricing documentation, which will cover all those areas which I just mentioned, like qualification, experience, how much time he is giving, so on and so forth. And then only we can arrive at the correct salary which is allowed, which might be allowed as per the corporate tax.
So in that case, labor contract may not be required, is it?
Labor contract will be required. This is a starting point, like how much you are paying. Then only we can arrive whether this is 100% allowed or only 70% allowed. But it is one of the important documents, sir.
Okay, thank you.
Thank you, sir.
Yes, salary is particularly very gray area. I know one of my client who is paying 200,000 dirham salary to his wife in the company. So, I mean, it is not justifiable. Then you don't have to pay any taxes. I mean, whatever salary, whatever profit you are generating, you can always forecast, and then accordingly you can pay the salaries to your relatives and don't pay anything to government. So that's the reason we need to have proper transfer pricing documentation in order to defend ourselves.
Yeah.
Yes.
Say suppose there is a company and the company is not having any business operations since many years, but it is still like the trade license is active. Do we still need to register the company?
Yeah. Registration is compulsory for all. Like we have seen many people, they just open the company for the basis of visas and nothing else. In that scenario also, you have to register yourself, and when you submit the return, then you can just mention zero income, zero expenses, and zero. But registration is compulsory for all. You have to compulsory for the return, irrespective of any activity or not.
You have to register, otherwise there will be a penalty. In the beginning, I mean, Ministry of Finance and Federal Tax Authority, they recently mentioned that yes, in the beginning they might not charge the penalty, but at a later date, definitely they are going to charge hefty penalties. So in order to avoid that, better you register.
Yes, Noreen.
Thank you so much, Chirag, for giving a lot of information. My question is related to the individual person. As you said that individual person also has to register for the corporate tax, right?
If business is carried
So
out.
basically, individual person has to register if he has a property and he's getting an income, a rental income from that property. So how it works, like the individual person has to register and then file the corporate tax, will it?
No, individual, see, if you are like having 3-4 properties, I mean, I think that's fine. I mean, it is not mentioned. Still, we have to wait and watch for the public, this cabinet decision. But if you are having like 3-4 properties, I mean, there are many, I know they are having few properties. But if you are having like more than 10 properties or more than 5 properties, then you are kind of like involved in the business. Then you have to register. But yes, you have to wait and watch for the further clarification in this regard.
Also, to just add on what Hari mentioned, when the law came out, they clearly mentioned on this area, because UAE was always promoting the real estate. So they clearly mentioned individual who is having any income from property which doesn't require a license. So in this case, we don't require a license. It was mentioned in the earlier public consultation document, but now when the law came, that sentence is removed. So we actually don't know whether yes or no, but most likely we assume it would be yes, because again, UAE wants to promote the real estate, a lot of investments are coming, so there might be some good news for all of us. We have to wait and watch. It's too early to say either yes or no. I would suggest let's wait for another month. Soon they will announce it. in the
So,
regulation.
but the registration for that individual person is necessary or not?
Registration is mandatory.
Mandatory.
If it's getting out of business, if it considers as a business, then yes, we have to register and pay corporate tax.
Okay. All right. Thank you.
Welcome.
I think I'm loud enough. Okay, so let's talk about qualifying income. So I have two scenarios. I have a company that has, let's say it's an online college, where the consumer is based outside UAE. So for instance, I own, I don't know, a corporate tax course or a finance course or whatever. And the actual students are not based in UAE, so the income is derived from another country. Is that qualifying income? Another scenario, I have
Let's take this first scenario. You mentioned that there is a company here based in UAE.
Yes.
It is registered in mainland or free zone?
either. Well, what's the difference?
No, because the difference is if it is in the mainland, then yes, 9% standard rate, flat rate will be applicable. But if it is in the free zone, then 0% tax rate will be applicable, depending on you fulfill certain conditions, as we mentioned in the presentation.
So that is still income derived in the within the state, if it is in the mainland company, if it's a mainland company?
It is mainland company.
Okay, so what if it's a logistics company? A logistics company where you have, let's say I am in Jebel Ali free zone, I own ship. According to the current VAT law, if you own a vessel and you have a client in let's say in Singapore, who needs goods moved from China to Singapore, this place of supply is at the point of the beginning of the journey, which is China. That means it's out of the state, out of scope.
Okay.
So is that also counted as qualifying income?
No, that will not be qualified income because anyway, I mean, you are dealing outside the country and all these ships and I mentioned aircraft and all international carriers, they are exempt income. They already mentioned in the...
For goods, not for people.
Yes. Yeah,
For goods
they
as
are
well?
not going to like... So in nutshell, I mean, like all Emirates Airlines and Dubai Fly Dubai and all the airlines and shipping companies, they will be out of the, because of the exemption status for them.
And if the company is registered in mainland, the same case applies, that it is exempt, it's at 0% for that revenue?
On that particular, I tell you, I mean, shipping and air lines, they are still exempt, whether even if they are in mainland. But I have observed, I mean, most of the shipping companies, if you look at it, they always register their vessel outside the UAE. There is one country, no?
Panama.
Panama. So they are registering all those, their vessels in Panama.
Yeah.
Then it is anyway exempt. I mean, even if you are in the mainland, doesn't matter.
The vessel may be registered in another country, but the company that manages and runs...
It's okay.
Is
Then also it will be in exempt status, no?
In mainland, we make an invoice here and you're making a profit, then you have to pay tax for that. Because you're making invoice in Dubai, correct? You're generating income in Dubai. So it's cost.
This is a related question. Suppose I am deriving income out of high seas sales, which we are regularly doing, right? The goods don't enter the country at all. And what happens to taxation on the income out of high seas sales?
Yeah, high seas sale, again, I mean, are you having a free zone company or mainland? Mainland company. So here we have to wait and watch. I mean, we have to wait for the cabinet decision. I think this should be out of the scope of corporate tax, most likely, even though you are in the mainland. But this particular transaction will be clarified at a later date by way of cabinet decision.
So then, if I have to file my return, unless and until this ambiguity is cleared, how do I treat that income? As taxable or non-taxable?
Yeah, that's the reason I am mentioning that we have to wait for the cabinet decision. Because there are few gray areas, like even in the free zone, they haven't given the definition of qualifying income and non-qualifying income. So we have to wait for a few more days.
Related to the salary question which the gentleman asked. Now, suppose if my company does not fall in the gambit of transfer pricing at all, if I am not dealing with any related parties, right? So I don't fall in the transfer pricing gambit.
So you are not paying any salary to your
To the
any
owners.
related person, no nothing.
It's a proprietary company of mine,
Okay.
which is registered in mainland, right? I'm not dealing with any related parties, right? Then what are the norms for salary? What is the cap for salary? Is it vis-a-vis to the turnover or what is it?
So as a owner, you are, may I ask if you don't mind, are you withdrawing any salary or remuneration? Then it will fall, sir.
Then you are.
It will fall.
Then you will fall.
As I mentioned, there is no cap, as he mentioned, as of the moment, sir. No cap. They have just mentioned it should be at arm's length. But two things over here. There might be small business relief for SMEs. There would maybe some threshold. Okay, for these companies we exempt. No need to maintain transfer pricing. Or there would be some cap, a cap, as you rightly mentioned, which we have to wait for the regulation, which we expect again to released by Feb. Yet this is not yet announced yet, sir. We have
It
to
is
wait
not
and
announced, but if it is like as per the market rate, and we have to wait maybe for small SMEs, they might come out with some sort of relief, or they can clarify that okay, transfer pricing will be applicable exceeding the turnover of this such and such. So we have to wait and watch. But definitely we will inform you once we get the cabinet decision. Then because this is one of the most frequently asked question everywhere in every conference. So we'll come back to you on this point for sure.
Sir, I need to ask, if I'm having a company in a mainland and I'm having the same company in free zone, means a different company in free zone, whereas I'm claiming all my expenses from mainland and from free zone I'm making all the incomes. So is it allowed? What's...
No, you see, if the both are related parties at the end of the day, shareholding pattern is same, right? Then it will be a problem, sir. You can't do that. You have to always match your expenditure against your revenue.
So you have to declare as a group in terms of for this.
No, you can't.
You can take an option if you want to. If you satisfy the conditions, either you can elect to form a tax group. If you want to fund separate return, you file separate return. But obviously, expenses you can only claim for that company.
No, in terms of services, my staff is providing services for both the companies.
Yes.
So how do I separate them?
No, now this functions will not work going forward. You know, you have to make proper documents for. If suppose you have employee A is working for both companies B and C. So either if A is working for B and C but getting salary only from B, not from C, then again it might be questionable by the authorities that why C is not paying. But again, it depends how authorities will also come to know about this nexus, you know. So time can only expect how authorities will take up this question, but yes, it will be very tricky. And we have to maintain a lot of documentation. Main thing is we have to justify. If you are able to justify, authorities will not question.
So onus lies to us.
Onus lies to us.
It is all self-declaration at the end of the day. As I mentioned you that they didn't even ask for the audited financial statement from the mainland companies. So it is self-declaration, and when they come for inspection or audit, that time you have to justify.
Because government is trusting you. They trust you that you are honest citizen, you pay tax honestly. So same honestly, you have to pay tax and declare what is correct.
Okay, thank you.
Yes, sir.
You can take the mic, I think. Yeah.
Suppose I'm a partner in one of the companies which is in mainland, registered in mainland, and again a partner in a company which is in a free zone.
Yes.
And I'm deriving salary from both the companies, right? So then what happens to the salary which I have drawn from a company which is registered in free zone, which is not under the tax gambit?
So now everybody is on tax gambit.
Sorry?
Every taxable person, every company is under tax gambit. We have to see whether it is qualifying free zone or not, number one. Number two, again, we have to maintain transfer pricing documents like how much time are you devoting to those companies? 50-50%, 80-20, you know? How much qualification you have. Suppose one is into service fund and trading. So how much is your qualification, your experience in this particular area? And then we can arrive at how much this arm's length transaction, and then the correct salary will be arrived at, sir.
Again, transfer pricing documentation will come into picture for sure. These kind.
True,
Yeah.
I agree. But then ultimately,
yes,
the income which I have derived
right,
or
sir.
accrued, right? is one is out of a company which is in mainland, one is out of a company which is in no tax zone.
No, we cannot say no tax zones. It is taxable zone.
No, free zone.
Free zone, see, it is taxable. The rate is 0.
Yeah.
It is still taxable.
It is taxable, rate is 0.
Yeah.
Right? So then what happens to the money which I have earned out of both the companies?
So you can enjoy that money if you have earned that money. Government,
Sunilji,
whatever money you have got,
yeah,
you can enjoy that money. Government
so
will not question that. But as I mentioned, we have to maintain proper documentation as per arm's length whether the salary which I am paying is justified or not. Like say, before the corporate tax was announced, I was getting example 100,000. After corporate tax, I increased to 500,000. So this is again not justifiable. How come suddenly I increase the salary so that the profits get reduced? It should be justifiable.
Yes, just to answer your question, I mean, there will be few allocation driver. I mean, maybe based on the revenue, you divide that salary. Maybe based on the best allocation, maybe based on the actual time you deployed in free zone company, in the mainland company. So you, because you are working, so you need to maintain some sort of documentation. And you need to prove that, okay, I am devoting 90% of the time in the free zone company and only 10% in the mainland. Then FTA will ask you, boss, okay, you give me the timesheet now, Delhi, and you maintain it properly and you justify. They will ask everything in detail. They will go through, okay, what work you are doing, and they will go in detail. I mean, it is not very easy. Like in VAT, FTA came for the inspection or audit for the vehicles, car, that we have given it to our employees, or we have been using it for our personal purpose as well and for business purpose. So they asked, okay, where is the vehicle usage policy? Give me the log table that on every single day, when did you drive for your business and what was the business, which customer you traveled, give us all the details. So it is not even worthwhile to claim that VAT input for the vehicle related to vehicles, you know. So a lot of people stopped, and that's the reason. I mean, always you have to look at the cost benefit analysis, and you need to justify, because at the end of the day, if you have proper documentation, you can justify, well, you go ahead.
Thank you.
All depends on our self-declaration.
Yes, Suresh.
So we have a group of 4 companies. Like in VAT, what we have done is we have created a group and then we do a consolidated statement and we file the VAT. So will it be allowed in corporate tax also that we form a group, or definitely all the companies have to be registered separately, but can we form a group and make a consolidated statement and
Yeah. First thing, good question. First thing, we have to consider that VAT group is separate and tax group is separate. You cannot assume, okay, already a VAT group, I can continue that. No. Because as I already covered in my slides, that for tax group, there are different conditions. So if you are able to satisfy those conditions, how to create a tax group, you can register all your companies under one and file one return as you are doing under VAT. Hope this answers your question. Thank you.
So I have an investment company based in the free zone, and that invests in the stock market in the US. So is that income going to be taxable? For the, it's a foreign source income.
No, that income will not be taxable.
Not be taxable.
Yeah, investment funds and all the like dividend, capital gains and gains on your financial transaction, they have kept it exempt.
So it's not going to be taxable. And also for the, if the company is in the mainland, but it's getting foreign source income, that's also not taxable.
No, see, we have to wait for the cabinet decision, but in the like, if you are in, particularly in the free zone, like DIFC or DMCC, or you have opened a company with the investment fund activity or proprietary investment, then it's fine. It will not be taxable. But we have to wait for the cabinet decision. If it is mainland, then a little bit gray area. So
all right.
Let's wait and watch for the cabinet decision, but I'll come back to you
once
I get the clarification.
Sure, yeah. I also have one more question. So if I set up an investment company in, like a real estate investment company in the US, for example, that invests in US real estate, and it's under my Dubai investment company, do I need to report the income that I get from the real estate company in the US in a consolidated financial statement for my Dubai company? Do I need to include that in the?
Yes, if you have the place of effective management, we'll go back to POEM.
Right.
So if that company is being managed from here,
yeah.
so then you might have to pay tax, sir.
Okay.
If the effective management is from UAE.
Yeah.
So
I'll need to include that company in the US into my consolidated financial report for my Dubai company.
Yes, and there would be one relief which we covered foreign tax credit.
Yeah.
You can also get that. Suppose because in US you would paying 30% or more taxes, right? But over here only 9%.
Right.
So you might, again, we have to wait and watch, but to answer your question, most likely it seems yes.
Yes.
If the place of effective management is in the country.
Yep. Okay.
Because logically, anyway, you are paying like 25-30% taxes in US. So, I mean, there is no point in declaring here because you already paid the taxes.
Okay. All right. Sounds good.
Yeah,
thank you.
Yes, ma'am.
So suppose there is a salaried individual here in UAE and out of his employment, I mean personally he's providing some IT consultancy services to some people outside India. And the income he is receiving in UAE. So he will have to register himself, he will have to take a license or he can provide services.
See, prima facie, it kinds of freelancer activity, correct? So freelancer, they clarified if you have a freelancer visa, we have to register. Yeah, it's a freelancer kind of thing. So most likely. And it's good to register also because nowadays the banks are also very strict. If they found that they're getting so much income apart from salary, they will also question you from where you are getting so much of income, what's going on. And there's too much data sharing between the banks and the FTAs. So it's better you streamline because over here you're also violating another provision of DET that if you're doing some commercial activity, you should have a trade license. So better you get registered, have a proper license, and then you do the activity. Yeah. Better to get registered, and maybe you can register in a free zone. And if everything is from outside free zone, it may qualify under qualifying free zone, and you will pay 0% tax, provided you follow all the conditions.
One more question. So there is an IT company, they have a licensing in India. As of now, their clients are outside mainland.
Right.
So, but now, they will be having clients in mainland also. So can they set up another company in mainland or it will come under a guard?
I mean, see, there is a genuine reason for you to set up in the mainland. I mean, you can always set it up, and because you are serving, because from free zone, actually, you are not supposed to render the services in the mainland. Free zone, if you are a free zone company, then legally, strictly speaking, you are supposed to deliver or render the services within the free zone or between the free zone or outside the country. So it is better to open a company in the mainland. You have a rational. I mean, nobody should stop you.
Again, the main thing is justify.
You
have to justify to the authorities.
Yeah.
If you're able to justify that, yes, it is a proper commercial business transaction, and it was not done to evade the tax, no problem.
I just have one question. So
Yeah.
the last one. So I'm part of two companies. Both companies have 3 shareholders. 2 of the shareholders are shareholders in both companies, but that shareholder and the other shareholder, they are not related. They are not in either of the companies. And the one company is an interior design company. The other one is a furniture company. So some of the times when the interior design company needs furniture, we contract the furniture company. It is a standalone business with other clients, but part of the clients are us, the interior design company. So are these related parties? Can I claim the expenses of the bills billed by the interior design company? I mean, the furniture company on the interior design? And can I register them as a group if not all the shareholders are the same?
You can always claim the expenditure as long as it is at arm's length and you are not inflating the prices of the furniture or any interior works, then it's fine. But yes, it's always better to have the proper transfer pricing documentation because this is a related transaction. And if you are dealing very frequently, then it's better to have transfer pricing documentation. But it's one-off and it is at arm's length at the market price, amount is very small, then it's fine. I think it shouldn't be an issue at all.
There shouldn't be an issue at all.
So, see, as he asked you if he's having a business outside UAE, where he's making an income. In case he is making any losses, can we show the losses and claim the corporate tax benefit? As in we are claiming for the profit and we are declaring it as a profit.
It's a good question. I mean, again, depends.
Losses in the free zone?
No, is what he's saying that companies outside UAE and place of effective management is in Dubai.
Okay. I mean, then why not? I mean, you can always claim there shouldn't be an issue when profit is taxable here, looking at we have to look at the facts, then you can always claim that one as well. Why not?
That can be adjusted.
Yes, yes. If you are not claiming that loss in that foreign jurisdiction, then you can. Why not? I think we are done, and even if you guys have any question, we can take it up one-to-one basis whenever you want. Thank you very much.
As the time is pressing, we would like to quickly move to the next part of the conference. Now, I welcome Mr. Himanshu Jain, partner, Primeview Properties LLC, who will be enlightening us on UAE real estate outlook. Over to you, Mr. Himanshu.
Yeah, I think recently we have started this Primeview property, and Himanshu Jain is our partner, and then my wife. And even Chirag's wife is also a partner in this real estate company. So my wife, Drusri Rankawat, and Chirag's wife has not joined, but yes. And Himanshu is the real estate expert. He has worked in square yard real estate in Mumbai, Dubai, and Canada. So we thought just to launch this Primeview property in front of you guys. And he can give you the outlook of Dubai real estate, and he can discuss on the golden visa as well for the real estate investor. Over to you, Himanshu.
Thank you. Thank you. Thank you so much for coming, everyone. I guess real estate is one of the most hotly debated topic in Dubai, and it's part of lunch conversation or dinner conversation or maybe a debated topic among friends. So let's see what is going on in Dubai real estate. We'll cover 3 topics: what we are doing, how has been last year for Dubai, what are the numbers, where the market is headed, where the transactions were done. And secondly, what the future holds. 2023, what is there? Because if we see the transaction, if we see the prices, the market is going up and up. So let's start with what we are doing. So we are Primeview team, me, Drusri, and we have Harshit and a couple of more members. And we are especially dealing in primary market and secondary market as well. So we have tied up with all the developers in Dubai. Also, we are handling especially RNG clients who wants to manage their portfolio with us. So after this meeting, you can contact us. Now, there is an old saying in real estate. Don't wait to buy real estate and wait. So how many of you find this true? I guess everyone. So 2022 has been a record year in the history of Dubai real estate. If I tell you the numbers, 265 billion worth of property were sold. And 98,000 transactions, guys. That's a huge number. Let that feeling sink in. So we have sold 5 property every minute. As I speak, there are 5 property getting sold in Dubai. So that's like 268 homes or properties sold in a day, 5 properties a minute, and total number of transactions is 97,398. Out of this, 55% were off plan, were ready, and 45% was off plan. So there was a clear demand for ready to move in properties in Dubai. So these are the numbers. Now, who were the top buyers in terms of nationality? So we have 21% sitting on top, UK nationals. Then 11% India, 3.5% 4.2% French, then Russians and other nationalities. So top 3 buyers were all Europeans and Indians. So we are going to talk about which are the major areas in Dubai where the most demand was there. So apartments area was Business Bay downtown, JVC, Marina JLT, Shobha Heartland. And in terms of villa and townhouses, Dubai South was the leading community in Dubai, Damac Hills, Jumeirah Golf Estate, Al Furjan, and the Valley by Emaar. So these were the top areas where the transactions were happening in Dubai. Now, this brings me to the question, why there was a demand for real estate in 2022 or in general? So we'll talk about that now. And I guess this question has been asked by each one of us, or wherever I go, me, Dhruvshri, or Hari sir, that why there is a demand and where this market headed. So we will cover both these things. So first, reasons for this surge in demand in Dubai market. So first one is golden visa or a long-term visa. Golden visa scheme was launched in 2019 by Dubai government, where if you invest 10 million dirhams in property, you can get a 10 years golden visa. Then in 2021, it was reduced to 5 million dirham. And since we know Dubai government is a very proactive government, after Expo 2020, which was over in 2022, they reduced the limit for golden visa to 2 million dirham. The rule is if your property is worth 2 million dirham and if it is full paid, you are eligible for a golden visa, which is for 10 years. Of lately, we are seeing that most of the foreign buyers, like people from across the world, whether you talk about India, Pakistan, Europe, Russia, Ukrainians, Israelis, US, they are flocking the city to buy real estate. Why? Because after COVID, the government has been raising the taxes everywhere in the world. And Dubai has proved its mettle during COVID. So it is one of the safest city in the world. As you can see, these are the reasons. One of the safest city, geographically located in the center of the world. Dubai is having unique advantage sitting in the Middle East. You can travel anywhere in the world by just traveling to 5 to 7 hours, whether you want to go to Europe or Southeast Asia or US. One more thing, people from India or the countries where the taxes are there, they will agree with me. Zero tax, because in other parts of the world, people are suffering from high taxation. So here, although this is the session for corporate tax, but in terms of income tax, the rate of tax is zero. So there is a zero income tax regime for people here. There is no capital gain tax. And on property also, Dubai government charges a one-time 4% Dubai land apartment fee, which you have to pay during the transfer. There are no other taxes in Dubai. Plus, world-class infrastructure which this city provides. It is one of the best in the world. I have been to many parts of different countries, but the infrastructure which we get here is second to none. Also, highly competitive real estate prices. We will talk about this in my next slide when we talk about the future of real estate or how outlook for 2022 looks like. So now we come to the last part of this presentation, which is outlook for 2023 for the same reason we have organized this seminar. So what the future holds? If I talk about numbers for real estate last year, there were only 45,000 homes delivered. So there is a clear gap between demand and supply. So you have a demand for almost close to 100,000 homes a year, and there is only a supply of 45,000. That's why we see the below supply for new homes is below the market demand, and the prices will go up to 10 to 15% this year also. The reason behind this is there is a supply chain delay post-COVID. Due to this, the new homes are not getting delivered. The new supply for homes will only come in Q4 2024. Now, these are the major reasons why Dubai market will keep on growing in 2023. First, we discussed about demand and supply. Second, very important point is sustained population growth. I have been a Dubai resident since last 10 years. My partners are here since last 20 years, 12 years. In 2006, Dubai population was only 1.6 million. Right now, it is 3.5. And as per the government estimate, they have taken an ambitious target of 5.8 million by 2040. So because of this, there will be demand for real estate in the market. Then you guys, or you all will be agree me on this, proactive approach by government, where for anything, they just take decision very fast, and it is always beneficial for the residents or the business owners. One of the main reasons we discussed was long-term visa. Other one was 100% ownership in certain new economic areas. Like in real estate, now it is allowed 100% ownership, where in past, you have to take a local partner. Then they have announced new metro lines, new infrastructure, which will help a market grow. Also, recently, 15 days back, Dubai government has released a new economic document where they are focusing on D33, where they want to increase the size of economy by 4 times. And they are focusing on new non-oil streams and new technologies. Dubai is one of the first countries where they are promoting Web3 and other new technologies where the jobs and businesses can come. Also, Dubai government is working on the Master Plan 2040, where they're developing new areas in real estate. The fourth area where 2023 looks very, very promising is Dubai has been ranked top tourist destination since last 2 years. It has surpassed even London. So in terms of short-term rental, in terms of tourist attraction, it has attracted the highest number of footfall among the different cities in the world. Now the last point, undervalued market at least 20%. I guess this will raise few eyebrows. But if I give you the figures, let me explain this. Well, I think yes, market is undervalued. Why? And we do not see, we have done our internal research, and we do not see any sign of this momentum slowing down, and investor will keep on flocking the city for investment. So why I say market is 20% undervalued, but here, if I say 20% undervalued, then it means only for certain areas, not generalizing the market. Let me give you the facts and figures. So as an investor, if I invest or if I find comparable real estate in different parts of the world, just like London, Paris, New York, London, similar apartment which you get a 3,000 dirham Burj Khalifa apartment, 3,000 dirham per square feet, you can get a Burj Khalifa apartment. I have the inventory. But similar apartment you will get 9,800 dirhams per square feet in London, 8,200 dirhams in Paris, and 7,500 dirhams in New York. So market is having still quite huge scope. Second important point, the most expensive property in Dubai in terms of apartment is Royal Atlantis at Palm, which is quoting at around 6,500 dirham. Still, it is cheaper than London prime real estate. That's why if you see the figures, let me go back to the previous slide. Top 3 villa transactions in 2022 and top 3 apartment transactions in 2022. You see that number? 600 million was the top, which was in Palm Jumeirah. Then 302 million and 280 million. All these transactions happened in last year in Palm Jumeirah. If I talk about top 3 apartment transactions, it was 163 million Royal Atlantis, which I'm talking about right now. Then we have Jumeirah Living Marina Al Arab. This is the same building which is getting developed near Burj Al Arab. Then we have one more Bulgari apartment in 133 million. So ultra net worth individual of around the world are flocking the city because the real estate is still very cheaper if you compare to the different parts of the world. So we strongly believe that 2023 will be bigger than 2022, and Dubai market will surpass all its previous record. Due to these reasons, and this presentation I can share with all of you, whoever needs it. Now, we are recommending few projects which are there in the market these days, and these are in different price range. First one is Danube Views, which is getting launched in JLT. After many years, there is something new coming up in Cluster K JLT with a very attractive payment plan. It's a fully furnished, branded Aston Martin residences, and you're getting a prime real estate in 2,000 dirham per square feet. Then we have something by Azizi in Maidan. So we have given you 2 options of apartment, one in JLT, other one in Maidan, and 3 options of townhouses and villas. One is by Emaar, which is one of the most promising and upcoming locality, which is the Valley. So the prices start from 1.5 million. Still, we can own a townhouse in 1.5 million, which is very attractive, and I can guarantee you this will appreciate in next 3 years. Then we have Damac Lagoons, which is in Dubai land, which is most promising upcoming community in Dubai. It was #1 last year. There were 5,000 transactions happening in this community. And still you can get a 4-bedroom townhouse in 2.1 million, and a 5-bedroom townhouse in around 2.5 to 3 million. Then I would like to recommend, or we would like to recommend, a villa community in Jumeirah Golf Estate. Jumeirah Golf Estate, again, a part of Emirates Living. It's a fully developed community. There, a developer known as Arada, which is owned by a royal family of Sharjah, and a joint venture between Saudi and Sharjah royal family. They are developing their first project in Dubai, which is a gated community. A villa and townhouses, you can get here starting from 3.5, 4 million, going up to 20 million. But big villa mansions you can get with a post-handover payment plan. We are giving exclusive offer for our clients. 1% monthly payment plan where if you don't have to take any bank loan, so you can pay 1% monthly. Also for investors who are only looking for investment and they want to have a secondary source of income or a second income or a passive income, we are having options where we are guaranteeing 8% return, guaranteed return from day one as soon as you invest in the property. These are hotel apartments in different parts of Dubai and India, and we can guarantee you a 8% return. Then we have ready townhouses because last year we have seen a continuous growth in ready townhouses and ready apartments. So in our inventory, we have quite a few options of this. Also, we are having an internal mortgage support where if any of you needs a mortgage evaluation and support, it is free of cost. For buyers who are having problem with mortgage and liquidity, we have tied up with a couple of developers we are having, which are giving post-handover payment plan, which is 7 years from the date of booking. So you live in the apartment and you pay, so it is a rent-to-own kind of concept. So we are having a special offer with these developers. Also, for RNG clients and the people who are here or your friends and family, If you book through us, there is a special discount and some gift voucher from our side. Thank you so much. Any questions? If you have, I'm willing to answer. Thank you.
Many thanks to Mr. Himanshu Jain for his insights into UAE real estate. Now, we have reached to the last part of our today's conference. If you are a business owner, and then on one hand, you might be eager to align your business to new corporate tax law, while on the other, you might be wondering where to begin. Well, we can start by recording all transactions in a compliant manner, which will be decoded by our next speaker, Mr. Saurav Sharma, Business Head, MENA, Marg ERP.
Thank you, everyone. My name is Saurav. I'm the business head with Marg ERP. Let me go back. Yeah. So thanks again for having me here, RNG Audits. And I like to start with a brief overview of our company. And so this is like our strategic intent with our seamless offering for Marg ERP, right? So as a vision, we want to enable and catalyze and revitalize the industry of SMEs. And end of the day, we have the mission to connect retail, distribution, and manufacturing, and provide a seamless solution who able to connect all the essentials of the industry. And the values that we have been offering, we have been offering the leadership to be more empowered. We want a passion in which all the business can work seamlessly. We want to have a cost-conscious solution for the businesses. So this is our strategic intent. So these are our CMDs who actually started our company back in 2002, 30 years back, when there was no idea of ERP. And so this is our support network look like. So we already having 850 support center. We have a strong presence in 28 countries at this moment. We have been catering more than 1.5 million users at this moment in 28 countries. So this is how our accolades look like at this moment. We have been top-rated ERP company globally, and these are the few accolades which we own at this moment, including the Guinness World Record to have a parallel number of users concurrently using. And we have so many accolades from different companies, including the Economics Time from India. We have accolades from DataQuest. So these are the few accolades which we have owned. So this is how our journey looked like. So we started in 2001 with barely 11 people, and they start producing a system which is close to the business owner, not to the just any particular fraternity, right? So this is how our journey looked like. In 2007, we start working on DOS to Windows system, which was a very inception phase. And after this, as the things goes by, we ended up in 1 million strong user in 2020. And we have more than 30 years of experience. So these are our products which we have catering at this moment. So one of the most oldest system we have, which we have been using, is Marg ERP. It's 30 years old system, right? And in India, we recently started working with ICICI Bank, and we started with ICICI Bank our own gateway. And we also offering the e-business app for enabling the sales and the owners to be on the mobile, and they're able to communicate with their sales team, and they will have a unified data across the globe, right? And we also offering a HR expert solution, which will be integrated with our ERP system. And this system can be seamlessly help the enterprises to have a sync with our ERP. We have a DMS expert. So for example, if we have multiple locations all across the globe, and on the one dashboard, if we want to see our data, as a business owner, we actually help them to have a reporting tool so that they can have an insight of it. So I think it's quite a buzzword, ERP. So it's basically many different functional units we have in our companies. And our system help them to integrate into the one system. So this actually help for as an entrepreneur to have more time with your business than the system and the compliances. So why ERP? So as a management, for example, if you have so many things to do, right? So it helps you to give you the priorities to your business only, and rest of your functions will be seamless with our systems. And of course, one solution for the better management, because at this moment, we have been banking upon on different platforms for our capabilities, right? So we need one system which will integrate all the information at the one dashboard. So this is what ERP do. It definitely reduce the cycle time because there will be so much hassle across the department. So it also help the cycle time reduction. Of course, since it's a seamless communication, so it also help us to cost control and low working capital. And of course, since we have to sync up with all the latest technologies like AI, ML, so these are the technologies which we need to keep up with the modern world. So this is something which it also gave it to the people. And yes, last or not least, Dubai, of course, known for its like the people who coming all across the globe, right? So it allows you to remove the geographical gaps. So this enables us to be more high satisfaction rate with our customer, and we will be more competitive, and we enable digital transformation with the system. So these are the features which we have been catering in our newest cloud solution. So one is sales analysis on Google Maps. It's called Push Sales. So Push Sales actually help the SMEs to know what will be their targeted clients in their region with the help of the API of Google. Number two is API integration, since most of the users have been using WhatsApp. So to interact with their clients, so definitely it's one of the biggest add-on for them. We have been, so basically we tie up with so many banks, and with these banks, we able to cater the QR-based transactions. And number four, we actually provide our one free website, which will be integrated with the ERP. And fifth is collaborative commerce. So for example, if we are supplier, we want to have raise the invoice. So there will be not a single sync between the supplier and distributor. So the fifth point, collaborated commerce, is one of the edge with our system, which actually help us to have a seamless transaction between sales team and management. And purchased import through PDF and different, all the modern formats. You can have your report. So we integrate our ERP with our application so that you can have insight on the go of your workings. And we already connected with so many banks globally for reconciliation. And we also help the people to API integration with different set of systems. And the cloud backup we also provide to have a 7-layer, like the storage backup for your system, because I think that's one of the most important part of any business. So this is how our cycle looks like. So once the order will be placed, so it goes to the inventory, right? And after, once the inventory updates, it goes straight to the management. And after this, once the inventory have confirmed it, so it goes straight to the accounting and invoicing. So once this happens across the retail customer, retail, and distributor, it goes for the payment gateway. And so we, in nutshell, we covered the whole phases of a business, from the placing the order till the delivery of the system. So these are the different modules which we have been supporting at this moment. So inventory module, I'm sure you guys have facing so many problems in inventory and to keeping up with your like sold goods, right? So we actually help the business with the inventory management along with the effective account management. So these are the different modules which we have. So basically, there are the 4 segments of business which we have been catering at this moment. So distribution is definitely one of our forte, and 50% of the pharma industry have been using our system in India for pharma. And retail is another forte of us. We also serving manufacturing and services. So these are basically the features which we have been offering in the different segment of the industry. For example, we have been working on the barcoding system. We have been working with CRM's features like loyalty management, scheme and offers, POS, credit management. So we have been offering all the essential features to run the business seamlessly. So this is how, since I mentioned earlier everyone about the cost effectiveness, so this is how our price structure look like, and we are not billing anyone on monthly basis. It's just a one-time model which we have been offering, and on this basis, you can opt out our system and take the advantage of it. So thank you so much for your time. Thank you.
Many thanks, Mr. Saurav Sharma. Ladies and gentlemen, no duty is more important than giving thanks. On behalf of RNG Group, I extend a hearty vote of thanks to all of you for your active participation in this conference. Stay safe and connected. Lunch is awaiting you. Thank you so much for being such amazing listeners. Thank you. Thank you so much.